Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. Before we start, we kindly ask that you like this video and subscribe to our channel for weekly updates. Let's get started. In today's video, we are thrilled to delve into the top 7 growth funds for long-term investing with an in-depth exploration. These funds represent the cornerstone of strategic investment planning, offering a diverse array of opportunities for those looking to secure their financial future. Join us as we embark on a journey through the dynamic landscape of investment possibilities, uncovering the unique features and potential benefits of each of these 7 growth funds. Whether you're a seasoned investor seeking to expand your portfolio or a novice eager to embark on your investment journey, this comprehensive exploration promises valuable insights and actionable strategies for achieving long-term financial growth. Let's take a look at the past year, a portfolio of the investment landscape in 2023. The captivating performance of the Magnificent 7 mega-cap stocks saw an impressive average return of 112%. This far surpassed the S&P 500 index, which posted a 24.2% return during the same period. These exceptional companies share common traits: robust investments in research and development, soaring earnings and revenue, and high valuations. Their dominance in their respective industries and substantial competitive advantages have made them the focal point of market discussions. However, it's essential to tread carefully. Relying solely on the Magnificent 7 for consistent outperformance may not be a wise strategy. History teaches us lessons, as seen with Netflix Incorporation, once a favored growth stock that faced a fall from grace. This underscores the risks associated with depending on a handful of stocks. To navigate this landscape wisely, consider an alternative approach. Rather than individual stock picking, embrace a strategic method by tapping into the broader growth stock style through exchange-traded funds, ETFs, and mutual funds. Let's delve into some compelling options. Number 1. Vanguard Growth Index Fund Admiral Shares. The Vanguard Growth Index Fund Admiral Shares, managed by Vanguard, a venerable organization known for its dedication to low-cost investing and investor-centric values, stands out as a stable and promising investment option. VIGAX provides investors with access to a wide range of large-cap growth equities, including some of the most illustrious members of the Magnificent 7, by following the CRSP US Large Cap Growth Index. What sets VIGAX apart is its stellar performance metrics, serving as a testament to the quality and potential of the underlying holdings. With an impressive return on equity, ROE, of 33.6%, VIGAX demonstrates the ability of the companies within its portfolio to generate substantial returns for shareholders. Moreover, with an impressive earnings growth rate of 21.1%, the fund demonstrates the strength and vigor of the growth firms it invests in. For investors seeking broad exposure to growth stocks without the hassle of individual stock selection, VIGAX emerges as a beacon of reliability and opportunity. With Vanguard's unwavering commitment to low fees and investor success, VIGAX stands poised to deliver sustainable growth and long-term value to its shareholders, making it a solid choice for those looking to embark on their investment journey with confidence and conviction. Number 2. Schwab US Large Cap Growth Index Fund. Schwab's US Large Cap Growth Index Fund presents investors with an attractive and cost-effective avenue to access the dynamic world of US large cap growth stocks. By meticulously tracking the performance of the Russell 1000 Growth Index, SWLGX ensures that investors are positioned to capitalize on the growth potential of companies that are driving innovation and leading the way to progress across various sectors of the economy. One of the standout features of SWLGX is its remarkably low expense ratio of just 0.035%. This cost-effective structure not only minimizes the drag of fees on returns, but also enhances the attractiveness of the fund for investors seeking efficient exposure to growth stocks. Moreover, SWLGX offers a diversified portfolio that spans multiple sectors, mitigating sector-specific risks and providing investors with a well-rounded exposure to the growth opportunities present in the market. For investors seeking broad exposure to growth stocks without the burden of high fees, SWLGX emerges as a compelling option. With Schwab's commitment to transparency, reliability, and investor-centric values, SWLGX is well-suited to meet the needs of investors looking to capitalize on the potential of U.S. large-cap growth stocks in a cost-effective and efficient manner. Number 3. Fidelity Blue Chip Growth Fund. The Fidelity Blue Chip Growth Fund, which is managed by Fidelity Investments, a venerable titan in the asset management industry renowned for its dedication to investor success and innovation, is a shining example for investors looking for long-term capital appreciation. With a storied track record dating back to 1987, FBGRX has distinguished itself by consistently outperforming its benchmark, the Russell 1000 Growth Index, over the years. At the core of FBGRX's investment philosophy lies a focus on blue-chip growth stocks, representing companies with proven track records of growth and stability. Through its active management approach, FBGRX seeks to unearth compelling investment opportunities and capitalize on evolving market dynamics to deliver superior returns to investors. This proactive strategy sets FBGRX apart from passive funds, allowing it to adapt swiftly to changing market conditions and exploit inefficiencies in the market. While FBGRX's expense ratio of 0.69% may appear higher compared to some passive funds, investors are afforded the benefit of Fidelity's expertise and experience in navigating the complexities of the market. The active management approach employed by FBGRX aims to uncover hidden gems and capitalize on emerging trends, potentially leading to enhanced returns over the long term. For investors seeking exposure to blue-chip growth stocks and the potential for superior returns, FBGRX represents a compelling choice. With Fidelity's unwavering commitment to excellence and a track record of success spanning decades, FBGRX stands poised to continue delivering value and opportunities to investors seeking to achieve their long-term financial goals. Number 4. Invesco S&P 500 GARP ETF. SPGP, the Invesco S&P 500 GARP ETF, offers investors a unique opportunity to access growth stocks that exhibit attractive valuation metrics, blending growth potential with value investing principles. The acronym GARP stands for Growth at a Reasonable Price, reflecting the fund's focus on identifying companies with strong growth prospects trading at reasonable valuations. By tracking the S&P 500 Growth at a Reasonable Price Index, SPGP provides investors with exposure to a carefully curated selection of growth stocks that meet stringent valuation criteria. This approach allows investors to benefit from the upside potential of growth stocks, while also ensuring that they are not overpaying for future growth. One of the key strengths of SPGP lies in its diversified portfolio, which comprises 75 mostly mid to large cap stocks. This diversification helps mitigate individual stock risk, while providing investors with exposure to a broad spectrum of growth opportunities across different sectors of the economy. For investors seeking a balanced approach to growth investing, SPGP offers a compelling solution. By combining the growth potential of companies with a focus on attractive valuation metrics, SPGP provides investors with the opportunity to capitalize on growth opportunities while also managing risk effectively. With its focus on quality companies trading at reasonable prices, SPGP stands as a prudent choice for investors looking to navigate the complexities of the stock market with confidence and conviction. Number 5. Invesco QQQ Trust. The Invesco QQQ Trust, colloquially known as the NASDAQ 100 ETF, stands as a premier choice for investors looking to immerse themselves in the realm of high-growth technology and growth stocks. With a portfolio that includes holdings in all the Magnificent Seven companies, alongside other prominent technology and growth-oriented firms, QQQ provides investors with unparalleled exposure to some of the most innovative and dynamic companies in the market. Driven by the NASDAQ 100 Index, which comprises the largest non-financial companies listed on the NASDAQ stock market, QQQ offers investors a comprehensive snapshot of the technology and growth sectors. This index includes household names such as Apple, Amazon, Microsoft, and Google, among others, representing a diverse array of companies at the forefront of innovation and disruption. While QQQ's portfolio boasts immense growth potential, it's essential to acknowledge the inherent volatility associated with such high-growth sectors. The nature of technology and growth stocks can result in heightened price fluctuations, which may not be suitable for all investors, particularly those with a lower risk tolerance. However, over the long run, QQQ has shown to generate strong overall returns despite its high volatility. With the potential for large financial appreciation over time, QQQ may prove to be a lucrative investment for those who can withstand market fluctuations. Overall, QQQ serves as a gateway to the world of high-growth technology and growth stocks, offering investors exposure to some of the most innovative companies in the market. While its higher volatility may pose a challenge for some investors, QQQ's historical performance underscores its potential to generate strong total returns over the long term for those willing to embrace the associated risks. Number 6. Vanguard Mega Cap Growth ETF. The Vanguard Mega Cap Growth ETF stands out as a premier choice for investors seeking exposure exposure to the largest and most established growth companies in the market. By tracking the CRSP US Megacap Growth Index, MGK offers investors access to a carefully curated selection of megacap growth stocks, including industry stalwarts such as MasterCard Incorporation and Visa Incorporation, which may be overlooked by other growth ETFs. What sets MGK apart is its focus on megacap growth stocks, representing companies with substantial market capitalizations and proven track records of growth and stability. These companies often enjoy dominant market positions, strong brand recognition, and robust financial performance, making them attractive long-term investments for investors seeking stability and growth potential. One of the key advantages of MGK is its low expense ratio of just 0.07%, which makes it an attractive option for cost-conscious investors looking to minimize fees and expenses. With expenses kept low, investors can maximize their returns and benefit from the growth potential of mega-cap companies without incurring unnecessary costs. For investors seeking exposure to stable, established growth companies with strong market positions, MGK represents an ideal investment vehicle. With its focus on mega-cap growth stocks, diversified portfolio, and low expense ratio, MGK is well suited to meet the needs of investors looking to build wealth over the long term with confidence and conviction. Number 7. SPDR Portfolio S&P 500 Growth ETF. The SPDR Portfolio S&P 500 Growth ETF stands as an attractive option tailored for cost-conscious investors seeking broad exposure to growth stocks while prioritizing expense management. By tracking the S&P 500 Growth Index, SPYG provides investors with access to a diversified portfolio comprising 225 growth stocks spanning various sectors of the economy. One of the standout features of SPYG is its exceptionally low expense ratio of just 0.04%. This cost-effective structure ensures that investors can maximize their returns by minimizing fees and expenses, making it an appealing choice for those looking to build a diversified portfolio of growth stocks without incurring high costs. SPYG's portfolio is carefully constructed to encompass growth opportunities across different sectors of the economy, offering investors exposure to a broad spectrum of growth potential. By investing in 225 growth stocks, SPYG provides investors with ample diversification, helping to mitigate individual stock risk and enhance portfolio stability. For investors seeking a cost-effective way to gain exposure to growth stocks without compromising on diversification, SPYG represents a compelling option. With its low expense ratio and broad exposure to growth opportunities, SPYG is well suited to meet the needs of investors looking to build wealth over the long term while keeping expenses to a minimum. As we conclude our exploration, it's crucial to acknowledge the inherent risks involved in investing, and there's no one-size-fits-all solution. However, by staying informed, diversifying your portfolio, and embracing a long-term perspective, you can navigate the complexities of the market with confidence and conviction. If you found this information valuable, we invite you to like and subscribe for further insightful content. Remember, your journey to financial freedom starts here, and we're here to support you every step of the way. Happy investing!